What if I told you that the richest family in modern history built their fortune on a lie? Not a small lie. A lie so perfectly timed, so devastatingly effective, that it crashed an entire market in minutes and transferred the wealth of an empire into the hands of one man before anyone even knew what happened. June 18, 1815, the Battle of Waterloo. Napoleon versus Wellington. The fate of Europe is hanging in the balance. But this isn't a history lesson about war. This is about what happened in London while men were dying in Belgium. This is about Nathan Mayer Rothschild, a 38-year-old banker who allegedly received news of Napoleon's defeat a full 24 hours before the British government. And what he did with that information changed finance forever. You feel inflation eating your paycheck right now. You watch markets move on rumors and tweets. You see billionaires getting richer during crashes while you're told to stay the course. That system? It was born in 1815. Before we go further, drop a comment and tell me where you're watching from. And if you want the unfiltered truth about how financial history keeps repeating, because the same playbook keeps working, hit that subscribe button. They count on you not knowing this stuff. Let's prove them wrong. Because what happened on that June day wasn't just insider trading. It was the beta test for modern market manipulation. And the document that proves it? They've spent 2 centuries making sure you never ask about it. Let's set the stage. Early 1800s. Europe is exhausted. Napoleon has been rampaging across the continent for over a decade, toppling monarchies, redrawing borders, and bankrupting nations. Britain has been fighting him for years, spending unimaginable sums on war. The British economy is running on debt, government bonds called consols. These bonds are the backbone of British finance. If Britain wins, the bonds surge. If Napoleon wins, they collapse, and the British Empire potentially falls. Now, the Rothschild family. 5 brothers, 5 European cities: London, Paris, Vienna, Naples, Frankfurt. Nathan runs the London operation. But here's what made them different. They didn't just have banks. They had the fastest private intelligence network in the world, carrier pigeons, relay riders, encrypted messages. While governments were still using official couriers that took days, the Rothschilds had information flowing across Europe in hours. Sound familiar? Today, high-frequency trading firms pay millions to place their servers closer to stock exchanges for milliseconds of advantage. Information speed is still everything. The Rothschilds understood this 200 years ago. June 18, 1815. Waterloo. The battle rages all day. By evening, Napoleon is broken. Wellington wins, but London doesn't know yet. The official courier won't arrive for another day. The entire British financial market is frozen in terror, waiting for news. Fortunes are about to be made or destroyed based on one piece of information. Who won? Here's where it gets interesting. Rothschild had a man at Waterloo. Not fighting, observing. The moment Napoleon's defeat was certain, this agent raced to the coast, crossed the Channel in the middle of the night, and delivered the news to Nathan Rothschild in London on the morning of June 19th. A full day before the official word reached the government. Now, if you know the good guys won, you buy bonds, right? They're about to explode in value. That's what any rational person would do. But Nathan Rothschild wasn't any rational person. He was a genius at understanding crowd psychology and market mechanics. And this is where the legend gets dark. According to historical accounts, disputed by some, confirmed by others, Rothschild walked into the London Stock Exchange on the morning of June 19th with a stone-cold face. And he started selling, aggressively, dumping British consols like Britain had lost. The traders watched in horror. Rothschild always knew things first. If Rothschild was selling, Wellington must have lost. Panic erupted. Everyone started selling. The bond market collapsed. Consols went into freefall. Fortunes evaporated in minutes. Sound familiar? Flash crashes. Market manipulation through coordinated selling. Someone tweets something cryptic and billions vanish. Same game, better technology. And then, when the bonds hit rock bottom, when the market was in complete despair, Rothschild's agents, quietly, through proxies and intermediaries, started buying. Everything. At pennies on the pound. They scooped up a staggering portion of British government debt at the lowest price in history. Hours later, the official courier arrived. Wellington had won. Napoleon was finished. The bonds exploded upward, and Nathan Rothschild, in one day, had allegedly multiplied. Sound familiar? 2008. Banks get insider information about the housing collapse. They short their own products. They profit from the crash while their clients get destroyed. Same playbook, just more zeros. But here's what they don't teach you. It wasn't just about the money. It was about what that money bought. Influence. Permanent influence. When you hold that much of a government's debt, you don't just have wealth. You have leverage. You have a seat at every table. You become indispensable. Now, the Rothschild family has always disputed this story. Their official historians call it a myth, propaganda, a distortion of a legitimate trading strategy. And you know what? Some of that might be true. The actual details are murky. But here's what isn't disputed. Nathan Rothschild's wealth exploded after Waterloo. The family's influence over European finance became unshakable. And the mechanism they used, information asymmetry combined with coordinated market manipulation, became the template. Because here's the thing. Whether or not the Waterloo story happened exactly as the legend says, it doesn't matter. What matters is that it could have happened. The infrastructure was there. The strategy was sound. And more importantly, it's been replicated thousands of times since. The document everyone wants to see? It's not some smoking gun letter where Rothschild confesses. It's the trading records, the bond transaction ledgers from June 19th and 20th, 1815. Who sold what, when, and to whom? Those records would show the pattern. They would show if proxies were used. They would show the coordination. And those records? Conveniently incomplete, scattered across private archives, some destroyed in fires, others locked behind family trusts and financial privacy laws that didn't even exist when the trades happened, but somehow protect them now. But the real twist isn't about one family. It's about what this moment taught every elite financial institution that came after. You don't need to produce value. You don't need to build anything. You just need three things: information before everyone else, the capital to move markets, and the credibility to make people follow your lead even when you're lying. And the name that perfected this into a science? You won't believe how many times it shows up in the next 200 years of financial crises. The receipt is wilder than you think. Ever wonder how some people seem to get impossibly rich, impossibly fast? It's not always luck or genius. Sometimes it's a playbook, a hidden mechanism designed to extract wealth. Let's break down exactly how this mechanism works, because once you see it, you'll recognize it everywhere. Step 1 is the foundation: information asymmetry. This means you know something the rest of the market doesn't. Now, this doesn't have to be illegal insider information. It could be superior analysis, faster data, or better connections. Back in 1815, Nathan Rothschild famously used a network of couriers, carrier pigeons, and fast boats to learn the outcome of the Battle of Waterloo a full day before the British government. In today's world, it might be an AI that scans Federal Reserve meeting minutes for subtle language changes just before they republished. Or it could be seeing a senator's spouse suddenly buy up defense stocks right before a major conflict is announced. Even a tiny edge matters. In 1815, knowing the news one day early was an infinite advantage. Today, high-frequency traders make millions by knowing something just 3 milliseconds before everyone else. The principle is exactly the same. Step 2 is where it gets interesting. Manufacture the opposite signal. This is the real dark art of the trade. You have incredible news, but you act like you have terrible news. You start selling when you know you should be buying. Why? Because markets are driven by emotion. When a major player, a whale with a reputation for being well-informed, starts dumping assets, the crowd panics. They assume the whale knows something they don't. Fear is contagious, and it spreads much faster than logic. Rothschild's genius wasn't just in getting the information early. He understood that his actions carried immense weight. So he stood in the London Stock Exchange and began to sell, sell, sell. Everyone watched, and they didn't think, Maybe he's wrong. They thought, Waterloo is lost. He knows something we don't. Think about a modern example, the 2008 financial crisis. Goldman Sachs was creating complex mortgage-backed securities and selling them to clients as A-rated, super safe investments. But internally, their emails called them shitty deals. While they were pushing these products on their clients, they were simultaneously shorting the housing market, betting against the very things they were selling. The clients saw Goldman selling these financial products and thought, Goldman must believe in these. They had no idea Goldman was secretly on the other side of the trade. That's a manufactured signal built on information asymmetry. Which brings us to step 3, coordinate through proxies. You can't be too obvious. If Rothschild had sold off all his bonds and then immediately bought them all back under his own name, even the slowest trader would have smelled a rat. So you use intermediaries. You use front companies, agents, family members, and complex shell structures. You break up your big move into dozens of smaller transactions across different entities so that no single purchase looks suspicious. This is standard practice on Wall Street today. When an activist investor like Carl Icahn wants to build a huge stake in a company before launching a hostile takeover, he doesn't just start buying shares openly. He uses derivatives, swaps, and other arrangements to hide his accumulation until he is legally forced to disclose it. By the time the market finds out, it's too late. He's already in position. Look at the Archegos capital collapse in 2021. Bill Hwang built over $100 billion in stock market exposure, while only putting up about $10 billion of his own money. How? He used swaps with major banks, who acted as his proxies. The wider market had no clue about his massively concentrated bets until the whole thing imploded. It's the same playbook. Hide your true actions through intermediaries. Step 4. The market moves, you profit, then you rewrite the story. Once the panic subsides and the dust settles, you've made a fortune. Now you control the narrative. Winners write history, right? After Waterloo, Rothschild didn't just become rich, he became one of the British Empire's key financiers. Do you think the British government wanted the public to believe their financial savior got rich by deliberately crashing their own bond market? Of course not. So, the story gets cleaned up. It's retold as a tale of brilliant financial acumen, or lucky timing. The dirty mechanics get buried, the documents get lost. And anyone who asks too many questions is quickly labeled a conspiracy theorist. Think about 2008 again. The banks that caused the crisis got massive bailouts. They paid billions in fines, sure, but not a single top executive went to jail. The narrative became about too big to fail, and systemic risk, not coordinated fraud. The complex details of how they created toxic assets, sold them as safe, bet against them, and then got the government to bail them out. Most people still don't understand it, and that is by design. This leads to the final and most crucial step. Institutionalize the mechanism. You don't just pull off one great trade. You build a system where this advantage becomes permanent. Rothschild didn't just cash out after Waterloo. He used that immense wealth to become the financier of governments across Europe. He financed Britain's military campaigns and even funded their purchase of the Suez Canal. He made himself indispensable. When you're indispensable, you get access to information others don't. You get a seat at the table where decisions are made. You get advance notice of policy changes, war plans, and major infrastructure projects. The information asymmetry becomes structural and permanent. How does this look today? Think about the revolving door between Wall Street and Washington, D.C. Treasury secretaries come from Goldman Sachs and then go right back to Goldman Sachs. Federal Reserve governors own bank stocks and take lucrative board seats after they retire. The information flows both ways, constantly. BlackRock, the world's largest asset manager, advises the Federal Reserve on policy while also managing government bond portfolios. Do you really think they don't have an information edge? Let's look at some numbers to really grasp the scale of this. After Waterloo, Nathan Rothschild's wealth grew by an estimated 2,500% in just 5 years. He went from being a millionaire to one of the richest men in the world. In the 50 years that followed, The Rothschild family financed over $3 trillion in government loans, in today's money, giving them influence over nearly every major European nation. In fact, in 1825, when the Bank of England faced a total collapse, Rothschild single-handedly bailed it out with a massive shipment of gold. After that, his access to information was absolute. Today, high-frequency trading firms report profits on over 99% of their trading days. That's not skill. That's a structural advantage built on speed and access. And during the 2008 crisis, Goldman Sachs received $12.9 billion in bailout money that flowed through AIG, the very company Goldman had helped bring down with its toxic mortgage products. They profited from the collapse, and then they profited from the rescue. The system is a loop. You create a crisis or gain an advantage through information asymmetry. You profit from the chaos. You use those profits to buy influence and access. That influence gets you even more information asymmetry. And the cycle repeats. Forever. This isn't wealth creation, it's wealth extraction. When Rothschild crashed the bond market, he didn't create new value. He transferred wealth from panicked sellers to himself. When the banks caused the 2008 crisis, they didn't create value. They destroyed an estimated $10 trillion in household wealth and funneled trillions into their own bonuses and bailouts. It's engineered collapse for profit, and it works because the mechanism is invisible to most people. You see the market crash, you see the government bailout, but you don't see the coordination, the information advantage, or the proxies working in the shadows. They count on you not seeing it. They count on the complexity being too overwhelming to understand. They count on the truth getting buried. But now, you see the playbook. Fast forward to today, 2025. The mechanism born back in 1815 isn't just old news, it's been turbocharged. We're not talking about information traveling by pigeon anymore. Now, it moves at the speed of light through fiber optic cables. Markets don't take days to crash. They implode in microseconds, thanks to algorithmic trading. The players aren't just a few well-connected individuals. They're vast, shadowy offshore entities, powerful sovereign wealth funds, and AI-driven hedge funds that think faster than any human ever could. And the stakes? They're immeasurably higher. Think about it. In 1815, Rothschild's move manipulated one market in one country. Today, the entire global financial system is a single, interconnected web. A credit crisis brewing in China can send European banks into a tailspin overnight. A single inflation report released in America can cause currencies to swing wildly across the entire globe. The dominoes are all lined up, and they're much, much bigger. When the next engineered collapse happens, and make no mistake, it will, because the fundamental incentives for it have never changed. It won't be contained. It won't be a localized fire. It will be systemic. It will be global. And it will be instantaneous. The people who have that critical information advantage, the modern-day equivalents of the couriers from Waterloo, will be ready. They always are. They will be the first ones to sell, just before the panic sets in. They will be the first ones to buy everything up at rock-bottom prices when everyone else is ruined. And when the dust settles, they will be the ones getting the bailouts, funded by the very people who lost everything. Then they'll stand in front of the cameras with serious faces and tell you it was all completely unforeseeable. A black swan event, a perfect storm. But you know better now, don't you? You've seen the playbook. It's a simple, 5-step process that repeats itself throughout history. Step 1. Information asymmetry. Knowing something crucial that nobody else does. Step 2. Manufactured panic. Using that information to create fear and chaos in the market. Step 3. Proxy coordination. Using a network of allies to amplify the chaos and execute the plan. Step 4. Profit from the chaos. Buying low after causing the crash, selling high before it. And finally, Step 5. Rewrite history. Control the narrative. Call it unpredictable, and position yourself as the savior. The real lesson from 1815 isn't just that one family got incredibly rich. It's that a system was born. A system built on the simple, brutal idea that markets aren't meant to be fair, that information is never equal, and that credibility itself can be weaponized. That system is not a relic of the past. It's still running today. In fact, it's faster, more sophisticated, and more global than ever before. We're constantly told to trust the institutions, trust the markets, trust the regulators. But have you ever stopped to ask who built these institutions? They were built by the successors of those who perfected the Waterloo playbook. They are not designed to protect you. They are designed to extract value from you. They create a sense of safety, while the real game is being played behind the curtain. Denial is the most dangerous position you can take right now. Denying that this mechanism of manipulation exists. Denying that it has been used over and over again, in crisis after crisis. Denying that the next one, which is always just around the corner, will follow the exact same pattern. We are living on borrowed time, propped up by borrowed credibility in a system that is fundamentally rotten at its core. So what can you possibly do? It feels overwhelming, but the answer starts simply. You learn. You start to recognize the patterns we've talked about. You question the official narratives, especially when they are being pushed the hardest. You don't panic when they tell you to panic. You don't trust blindly when they demand your trust. And most importantly, you share this knowledge. Because the only effective counter to information asymmetry is distributed knowledge. The few win when the many are kept in the dark. They start to lose when everyone begins to see the game for what it is. Their power relies on our ignorance and our fear. So drop a comment below. Let me know if you see this pattern playing out in today's markets. Tell me, do you still trust the institutions, or are you starting to see the cracks in the foundation? And if you want to keep exploring the history they don't teach you in school, the mechanisms they never explain on the news, and the truth they hope you never piece together, then subscribe to the channel. Are we really wiser now? Or are we just walking the same old path, wearing better suits and using faster computers, but still heading straight for the same cliff? The original document from 1815 might be hidden away in some archive, locked in a vault. But the playbook is right here, out in the open for anyone willing to look. And this time, we get to decide if we're going to keep falling for the same old trick. The choice is ours. Thanks for watching.